Welcome to SimplerOptions.com. This is Don Kaufman. Let's start off this evening. Have you seen Netflix? Earnings are out in just the last couple of minutes. I'm actually on the East Coast right now. I'm joining you from Detroit, Michigan, Birmingham specifically. If you're familiar with the area, it is just a few minutes after the close. Netflix earnings are out, and it's a move. Now, let's first of all go over the expected move, and then we're actually going to look forward to some earnings to tomorrow night. And why all of a sudden are we looking at earnings? Because the volatility of the S&P 500, it's dead. It's dead in comparison to the last 3 weeks of trade, but we're at 2,100 and holding on to 2,100 like grim death right now. In fact, before I even get to Netflix, we're going to come back to Netflix momentarily here. Again, I'd be remiss not to mention the lack of volume in the S&P 500. The S&P futures today, these things only traded 1.1 million contracts, so it's slow out there. If you're not familiar with the S&P, what does it trade in a given day? Let me take a quick glance over here. If you look at volume in the S&P futures, and the S&P futures tell volumes about what's going on in the market. Last week we were cresting, 2.5 million contracts. Today we barely got over 1 million. In fact, yesterday, that was worse than nothing, which is under 1 million contracts. Doesn't happen very often. So let's glance over at Netflix, kind of in the here and now. What happens to be going on in Netflix? Well, kind of exploding to the upside right now. Now, the July expiration, the July options to July expiration indicated as much of as a $9 move up or down. Like, you really got to pay attention to the expected moves. Now, Netflix, I know you're looking at it, and if you haven't looked at it today, you're like, why is it a $98 stock? It was almost a $700 stock. Netflix split 7 for 1. Okay, so just, hey, you take a $700 stock, divide it by 7. What do you come out to? A $98 stock. But for every one of us that happens to trade options in any way, shape, or form, this quite possibly was the worst time in history to split the stock, because then you get what we call funky strikes. Well, what I call funky strikes. What does that mean? Look at this. The 106.43s. Oh, I'll take some of those 106.43s with cheese, please. It's really difficult to trade. So, hey, Netflix, next time, can you pick like the day after the earnings announcement, please, to split the stock? Nevertheless, a $9.30 expected move. But look at the stock right now. So the last price is $98. What's it up? Right now it's up about $10, $11. Netflix is notorious for blowing through expectations, expected moves over there. Just kind of keep that in mind, moving forward. Netflix, in years past, and this is just a 9-month, but it's been an earnings gap-filled wonderland. Okay, and if I go back even further in time over here, I'll go back all the way, for instance, like a 3-year daily, and even close down the left side bar, taking a look at this chart. Yes, Netflix was a stock that did have what we term a 4 sigma move, or a 4 standard deviation move. For those of you that don't speak geek, 4 sigma move, that what that really implies is it moved 4 times the expected move in a very, very short period of time. Nevertheless, I would expect that Netflix would probably pull back right into the range of the expected move, which is about $9.30, and it's doing it right now. It's listening to Don. So that's Netflix, but it's done. That trade is absolutely done. This is a stock, though, that I have watched and stalked for quite some time. If it opens strong tomorrow, I may let portions of the day play out, and I'm probably going to look to get short a little bit of Netflix, and it's not a short duration trade. I'm going to look to get short Netflix for a little bit more of a long duration trade out there. When I say long duration, the next 2 to 3 months, this is a stock that over the years, I've had kind of a love-hate relationship. Okay, I, as a trader, have found it significantly easier to be short positions rather than long, meaning that you invest for the long duration. What is the long haul? Is that when you got one foot in the grave or both feet in the grave? But it can take years for stocks to appreciate to market caps like Netflix. It can take days for them to come down. So I'm looking to enter into a short position for the next 2 to 3 months over there. Something I feel very strongly about. Another one that's on the drawing boards for tomorrow, Google. Okay, so Google is going to have earnings. Okay, that is after the bell on Thursday. Again, after the bell on Thursday. Now, one of the questions I always get, do I trade Google or do you trade Google L? Well, take a look under option statistics here on Thinkorswim. There's 28,000 contracts that traded in Google. How many contracts, ladies and gentlemen, did we trade in Google L? Okay, and you're going to find out it's going to be similar. So do I trade Google? Do I trade Google L? You don't worry about it. Okay, here's another one that, like, when they split it, they just destroyed the liquidity. The same thing is going to be true of Netflix because it's got funky strikes. But inside of Google, number of trades exists. The expected move is nowhere near, on a percentage basis, what it was. It's a $19 expected move, plus or minus, on a $583 stock. I've built just a kind of a quickie trade here. This is what they call the iron butterfly. Dun dun dun. All it is selling a 585 call, selling a 585 put, buying a 555 put, and buying a 615 call. Again, it's a 585 call, 585 put, 615 call that I am buying. Okay, hedging again with a 555 put for about a $16.45 credit. If you ever take a look at the risk reward of this one, okay, ultimately the max profit's about $16.45. The max loss here is about $1,300 and change. That's with one contract. This is a big boy trade. Okay, you put kind of your big boy pants on. This is not a trade that's going to be for everybody. There is quite extraordinary risk in it. The trade is only good for the next 2 days. What does it want? It wants Google to stay put right at 585. However, if you're going to put this trade on, you're going to follow this trade, be totally comfortable with the risk, okay? And because there is no fix for a trade like this. If it goes against you, chicken's done. There's not much you can do. Pull this trade off before, okay, the expiration, before Friday. What do you want? Again, the stock right at 585. You may have to adjust the strikes in this trade very slightly, given the fact that Google could move tomorrow prior to the earnings announcement. With that, I want to invite everybody to come to Bruce's class. So Bruce is going to be doing a class on Thursday. It's a class, simpleroptions.com/Black Swan. It's a class to discuss how to hedge yourself against black swans. Black swans are unforeseen events, catastrophic events in the markets. What a black swan happens to be and how to protect your portfolio from the black swan. Join us, okay, for Bruce's class. And thanks a lot, everybody, for joining me today here on simpleroptions.com.